All right, guys, so let's get right into it. Today, I am basically doing gold analysis on gold. If you don't know my channel, what I do, I trade fair value gaps and order blocks only. So if you're a smart money SMC trader, supply and demand, or you trade ICT, this video may be for you if you want some tips or you're struggling with a strategy that you hopping from strategy to strategy. So yeah, let me just go ahead and show you my routine, what works for me. And let me just so the first thing I do on gold is gold moves slower, and the reason, well, not the reason, but the gold moves slower. So I actually do not use the 1 hour for my market structure. I know people use trend lines for like the 1 hour, but I don't do that. And yeah, so I'm going to show you guys actually how I properly do my market structure. So yeah, let's get right into it. So the first thing you want to do is start on the smaller time frame when you're working with gold, because I notice most of the time when I try, like I said, go on 1 hour, 30-minute, or even higher time frames, it's if you trade market structure and you're familiar with it, it's very difficult to actually find clean price action to me on those time frames. So if I go on the lower time frame, like I'm about to show you now, let's go right in. So if I go on the 5-minute, and the 5-minute is the time frame that I usually start off with when I'm trading gold, when I'm looking for my fair value gaps and my supply and demand setup. The fair value gaps and the order blocks are my supply and demand trade setups. So right now I am selling, and so that means I want to sell high, not low. And if I'm buying, I buy low and I sell high. That's how it works. So the first thing I do for my trend is I go on full screen and I go on the 5-minute chart on gold. And when I go on the 5-minute chart on gold, you're going to notice the chart's going to be in the center of your screen. What you're going to want to do is you're going to want to actually move the chart from the center of your screen to the left. To the left. And the reason we're doing it to the left is because when you have it in the center of the screen, you're focused on all this history that doesn't matter, and it confuses you from finding the proper trend. So to actually counteract that, we are going to, hold on a second, go all the way to the left, zoom out, and then mark your structure from right to left. So right now, I already did it, but I'm going to show you. I zoomed all the way out, and the reason you zoom all the way out is so you can see the most relevant highs and lows. So if I take an arrow tool right here, our most recent high is here, where I have the blue arrow, and our most recent low is here, right? And so these are my most recent high and low. So if I'm selling, I want to sell at near the high, which is the top blue arrow, instead of the low blue arrow, because the top blue arrow is closer to higher prices, selling at premium prices. And what I'm going to do is, like I said, zoom all the way out to see the most relevant pieces of structure. Because if I zoomed all the way in and I'm on the 5-minute, I might think that this is the trend, right? And this is a bullish trend, but if I zoom out, it's bearish. So zooming out allows you to see the most relevant structures and highs and lows that form the trend. So it allows you to see the pieces of market structure that form the trend, and that's relevant. The strongest pieces of structure that So after you do that, you want to go ahead and zoom in now. And like I said, this is where you identify your fair value gaps. So for me, how I identify my gaps is I always choose, when I'm selling, gaps at the middle to top part of the range, because that's usually where price pulls back. Because when prices move like this. In the bearish market, down, up, down, right? Down, up, down is how prices move. And so it's expansion and then a retracement. Your job is to get in on the retracement before the second expansion or the next expansion. And so that's what we're doing. We're selling high, and this price, what's doing right now, this is the pullback. This represents pullback. What's happening right now with price, where price is currently at on gold, it's pulling back within this range. And the reason I call it a range, because you're thinking of consolidation range, but what I mean by range is price range. So for you guys, if you're trading and you're in you're in price expands, it doesn't necessarily always have time to pull back and recorrect itself before moving and continuing. And so range is created by high volume in the market, when like the market's moving big and there's volatility in the market, and the market moves and expands without retracing. That's when we can get in. because when it expands without retracing, it forgot to, and so the market will come back to recorrect itself before continuing that trend. And your job is to be patient and wait for it to come back to that in correction. And so the cool thing is where it's correcting and pulling back is actually the fair value gaps and those supply and demand setups that we trade. So you can choose the highest gap. And I know some people have different strategies, but for me, I mark up all the gaps I see. So right now I'm on the 5 minute, and here's how I mark up all my gaps. So I mark them up right this, and then this is, so there's 3 gaps in total. And what I'm doing right now is I'm predicting it's actually going to go to at least the second or the third one. It looks like right now price is getting ready to crush through this first one, the small gap. Well, it's actually a big gap, but this is where the gap wick is. So that's where the gap actually is. So when people say fair value gaps, the gap is the space between where it did not get filled. The wick did not fill the spaces between these candles. So when these candles started dropping, what I'm saying is usually, like I said, it's the same thing in the concept with the pullback. When the price was dropping, the candles were dropping, there was no wick to recorrect itself before going down. And usually healthy price action, like you see here, this wicks, price expanded right here, and then we had wicks come and correct itself and tap in and fill inefficient price action before moving, because that's what price does. And so we have all this unhealthy price action that did not get filled. And sometimes you do have gaps that don't get filled. And the only reason that happens is because when there's a lot of volume in the market and it's high impact, there's a lot of news happening and stuff happening in the economy. When you're trading gold and the US is moving, sometimes it doesn't have time to get the gap all the way behind far back. And sometimes if there's enough volume, it will just continue to go down. And so if you're confused, you're like, okay, so do I still trade it? You don't, because the fact that it did not get, like, for example, this gap where the blue arrow is pointing to right now, price did not come and fill in that fair value gap, because it came up and tapped in 50% of this whole entire range itself and then reversed because there was so much volume in the market, it didn't have time to. But it did the same thing here. So much volume, the market expanded. You see all the gray candles expanding, and now we have time now. Now the market's coming back and filling. And so the market isn't always going to fill in every single gap, but the market does fill in gaps. And so the only time it usually does not fill in every single gap is when there's a lot of volume in the market. And so even so, it doesn't matter, because you can just get in on the next expansion. Like I said, that's all the market does. It expands, which means it goes straight down or straight up, and it goes sideways. And then it goes straight up, and it goes sideways. It expands, consolidates, expansion, consolidation, and then we're in the bearish trend. It does the same thing. It expands, consolidates, like up here. Look, expands. Do you see? Expansion right here. Consolidation, expansion, consolidation, which is right here. And consolidation, expansion. And right now the market is expanding to the upside to fill in this inefficient price action from all these gaps, fair value gaps. So yeah, guys, this is me sharing my strategy. And also, I don't only trade gold from 9 a.m. to 11. And sometimes I trade it after, but I usually do it 9 a.m. to 11 because that's when there's the most movement happening, and I usually like to take most of my setups. So yeah, what the market's doing right now is it's going to that gap right now. So if you went on like the 1 minute or the 2 minutes, some people trade on that. I don't trade on there on gold. Some people would have gotten, and some people actually buy on the way up to the gap. You can do that. Some people will actually buy and enter a trade on the way up. I prefer not to and just wait for the big giant movement. But some people will actually just trade on the way up, and basically they're trading towards their entries is what they're doing. That's what is going on there. So yeah, the first step is market structure, identify your trend. And once you establish your trend, how you're actually going to find your fair value gaps is by finding them at the top part of the range. So if you're selling high, so your fair value gap should be high. And if you're buying low, so your fair value gap should be low. So yeah, I really hope this video is helpful to you. And if you want, I can actually type out this stuff. And so this gap's going to be probably taken out, this first one. And this is why I like to choose the highest gap, because sometimes you'll go for the first gap and not realize when you switch to different time frames, like the 15-minute, there's actually an order block there too, not just a gap, but order block, which is the only two trades that I trade: fair value gaps and order blocks. That's all I trade. And how I find them is by two things: market structure and the news. I don't even look at pairs unless I know what news is coming out, because if there's no US dollar news and there's nothing happening with gold, I don't need to trade gold because there's no volume in it. I only trade gold when the smart money and the large investors are trading gold, because then gold moves accurately and actually does what I want it to do. For me, that's just how I trade. Other people trade differently. So there's an order block right there. I'm at the top part of the range with the blue arrows are pointed to, and some people are going to trade that. I'm actually going to just wait for it to come up to this first box. And since we're on the 15-minute, I'm going to go on a smaller time frame and wait for this whole trend to be broken until I see some clear bearish momentum breaking this trend. Then I'm going to enter off of that expansion. But yeah, guys, remember, the first step is identify your trend. Second step is sell. If you're selling, sell high, look for your fair value gaps high and low. And if you're buying, buy low. But yeah, oh shit, battery's low. But I'm gonna go ahead and end the video so I can charge my MacBook. I hope you guys found some value out of this. And yeah, if you have any questions, just ask me. I've been doing this for six years total, but not the fair value gap strategy. I've been doing the fair value gaps they used to be called imbalance gaps, for about only 2 to 3 years. So if you're interested in learning, and if you're interested, if you can't find someone that can teach you the fair value gaps in a way you can understand it, just let me know, because I'm a really simple person. I'm just on YouTube sharing. There's plenty of videos you can watch. And yeah, feel free to join my free Discord, by the way. It's free. You don't have to pay anything. I do have paid services. I don't have courses. You guys don't have to pay for a course. I do have one-on-one. I work directly with my students, but you have to apply for that. I don't just work with anyone here on YouTube. Any person can't just join. I have to see that you're actually disciplined and actually see that you actually want to. And most people do that through my form. I have an application form, and I have questions on that form. You can take like 10, 12 questions. And then once you get done, I'm going to review the questions and see if your answers actually align with the strategy that I'm actually offering people. So if you're interested in that, let me know. And yeah, I'll talk to you guys tomorrow.